What's up, investors? It's the Russian dude. Welcome to another episode of Friday Commodity Capitalism. What's up, Mr. Raya? Thanks so much for joining. I hope 6 p.m. is not too late for you. In fact, you joined right away, so maybe it's even gonna be better for you. So we're gonna see how it's gonna work in the future. Okay, in today's episode, we're gonna be talking about whether the stock market has reached its bottom, if it's gonna start reversing soon, or is it gonna start going down, but if it's gonna continue going down, basically. Because at this very moment it's literally 50-50, because one, macroeconomic conditions, macroeconomic events show that we kind of need to go even lower, because future perspectives are pretty bad, especially for companies that do not make money at all. But at the same time, we see the condition of the stock market itself, of the biggest companies, and basically there are not too many bad things, not too many horrible things that are happening, which basically does not show us 100% concrete plans that we are going to continue going down, and in fact we might start kind of reversing. But in my honest opinion, long story short, we're gonna be trading sideways in the next couple of weeks, couple of months, maybe up to even half of the year. So which basically means we're gonna go up 3%, go down 4%, go up 5%, and so on and so forth. Okay, and Makis, new member, new investor, thanks so much for joining, Pakis. I appreciate every single person who is watching this, so thank you all so much. And my take is eventually going to go lower, same as Mr. Araya. Everyone wants the market to go lower, hopefully because you want to buy the dip, you want to buy cheap stocks. And even though the market as overall was at some point down 9.72%, some individual companies were down as much as 50, 60 or even 70%. Okay, and today we're gonna be using my iPad as always. Today I came prepared, so let me just switch it to iPad and we can continue. Okay, now we have iPad, now we're professionals. Okay, so without going too much into details, just to give you my summary and conclusion, once again to reinforce my statement for those of people who just joined or who are watching this in replay, I personally think, because obviously no one knows what's gonna happen in the future, if I knew for a fact what's gonna happen, I'll just sell every single thing that I have, put it into the stock market, and then even if it's like 10% gain, I'll just get 10% more money. Because I don't know 100%, I cannot make such predictions. I can only make guesses. And my guess, once again, is that for the next several months, even maybe entire 2022, we're gonna be trading more or less sideways. And so, to begin with, if you've been watching my previous live streams, you might know that one of my biggest arguments why the stock market was supposed to crash, but it was not crashing, and it's not crashing as much as you might want it to see right now, it is because it is supported by the biggest companies, such as FANG companies, such as Facebook, Amazon, Apple, Netflix, Google, and some additional big cap stocks such as Microsoft, Tesla, or Nvidia. So, this is why the stock market went down, indeed went down 9.72% from its all-time highs at certain point. But now we're kinda not seeing like this much volatility, we're not seeing further decline, we're not seeing upward trend, we're not seeing the reversal. My main idea about this is that the whole stock market was looking after these big companies. Because these big companies, once again, these fun companies, Microsoft, Tesla, and Nvidia, they represent about 30%, almost 30, around 30% of entire stock market capitalization of the United States. Which basically means less than 10 companies represent 30% of the stock market with 4,000, if I'm not mistaken, plus companies. So depending on how these companies report, how these companies behave, they will either drag the stock market even further down, or they will help assist the stock market in its recovery. So we saw that the Facebook at some point was down basically like what? At the lowest point was down almost 32%. But then, like I was saying, like you remember that then after it went down all the way 32%, it was up again 5%. Facebook is not the best example, because this was one of these just two companies from these mega cap companies such as, once again, these fun companies that went down significantly. Another one was Netflix, which I also have this on my list. So you see, first of all, it drops 30%, then it is up 5%. Better example with Amazon. At the beginning of this month, it went down, let's say so, as much as 16%, and then once again from the same point, it went up. It's so hard to select on iPad, but it's whatever. And then it went up by again 8%. Then it went down again like what? I should have been using better, impossible. Okay, so then it went down again 8%. And then it went down again almost like 16%. And since this 16% rally, which was almost after the earnings report, it went down again 5%, which once again, the company goes down 5%, the next time it goes up 6%, then it goes down again 7%, the next time it goes up 16%. So it's up and down, up and down, up and down. There is no clear trend. Same stuff with Apple. At the beginning of this at the beginning of the month, like in the January 12th, it went down by 9.2%, let's say so 9% to make it simple. And then it went down from negative 9% all the way again plus 10%. Then it was down from this plus 10% all the way to minus 2%. Then it was again plus 2%, minus 2%, plus 2%. And eventually the week closed, the month closed with another negative 4%. Once again, you see plus 2, minus 2, plus 4, minus 6, plus 2, minus 3. Same stuff with Netflix. Well, Netflix is more close to Facebook because the company went down significantly on its earnings report. So it went down as much as 33%. But then from its lowest point, it went down another 27%. And then it went, after going up 27%, it went down again 14%. Same stuff with Google. I'm not gonna once again show you every single period. I'm not gonna zoom in on every single period, but you see the tendency. Stock goes up 5%, then down 5%, up 4%, down 6%. Same with Google, same with Microsoft. So, Tesla is more or less in continuous downtrend for the last month. It was a pretty big bump approximately here when it went up by 13%, but overall Tesla lost 22.5% in comparison to the previous month, which is justified, to say the least. Same with Nvidia, up 2%, down 2%. So you see, these mega cap companies, massive companies, incredibly big companies that represent almost a third of entire stock market capitalization of the USA, they're not going anywhere significantly. They're not going up, they're not going down, they're just going up and down every single day. One week it's uptrend, the next week is downtrend. Then it's again uptrend, then it's downtrend. So for this reason, the stock market follows the tendency of these big market capitalization companies. As you can see, entire VOO, which is the S&P 500 ETF, is exactly the same. One time it's minus 10%, I think it's approximately here, minus 8%. And since this minus 8%, it went down by another 6%. Now we're going down again. The week closed in the negative scenario. The week closed in negative 2% once again. So, which basically means most likely it's not prediction, it's just assumption, just a guess, according to what we see right now. Most likely next week is going to be again positive, because that's how it is for the last month, basically. And so, why is this happening and what is going to happen with the stock market in the future? Is it going up or down? These are the questions that I'm asking, that many of you are asking, either you're watching right now or watching in the future. And these are very, very good and smart questions that no one has concrete 100% answers to this. But my assumption, my honest assumption, once again for the third time, because we already have 4 people, which is a pretty significant number for me. I usually have 2-3 maximum. So if you just joined, I will say it once again. My honest prediction is that for the next up to maybe even entire year, we're going to be trading just like this. Most likely, this is my most, let's say so, bearish scenario. But my most certain, let's say so, most promised, most possible scenario is that we're going to be trading just like this for another 3-4 months. Because in 3 months, it's going to be next earnings season. Because obviously there are quarterly earnings reports. And the reason why they're called quarterly is because they're happening every quarter, and every quarter is obviously 3 months. So all the way until next quarterly report earnings season, we're gonna see, in my honest opinion, just the same up and down, up and down, up and down. I don't think anything significant will happen. And so one of the biggest fears of the stock market at this very moment is that there are gonna be so many federal interest rate hikes. And I have it right here, if I'm not mistaken. I did prepare myself today, so I just need to find it now. Where is it? I think it's here. Okay, so here we go. Goldman Sachs predicts that the US Federal Reserve will hike interest rates 7 times this year, in rate of the highest inflation since 1982. Originally, like last year, it was only promised that the interest rates will only go up twice. At the beginning of 2022, when the inflation went out of control, which is, by the way, at this very moment, it's 7.5%, the highest inflation in 40 years. Just imagine that. Like our parents were kids when the inflation was this high. This is just insanely crazy. So, and obviously when the inflation is unstoppable, and this inflation is not even the final inflation, because obviously the Federal Reserve hides some numbers. It's not accumulating the entire inflation, because they're saying that the household shelter, like rental inflation is approximately, if I'm not mistaken, 3.6%. While on average across the nation, it is more close to 14-15%. With some regions, with some states, with some cities like Texas, Miami, and New York, if I'm not mistaken, the rents went up as much as 30%. Imagine this, 30% rental increase, and they're saying that the rental inflation on average is like 3%, which is obviously very, very low number. So okay, officially it's 7.5%, but in my very honest opinion, I think it is way higher than this. And what's up, investor Nick? Thanks so much for joining. Market is going to be shaky till March Federal meeting is passed. Basically, yes, until we see the Federal Reserve next meeting. This is the first of all. The second thing, in the earnings season, which is going to happen in 3 months from now, because right now we're in the middle of earnings season. So all the way until, definitely until earnings season, most likely it's going to be up and down, up and down, up and down. And so once again, Federal Reserve predicts, Goldman Sachs predicts 7 interest rate hikes this year alone. This was increased just from 2 potential hikes. So yes, and previously, the same Goldman Sachs previously said that they're thinking that the Federal Reserve will increase interest rates just 5 times. So now it's already 7. Who knows, maybe it's going to be even more. So once again, the biggest inflation since 1982, which is at this very moment, it's 7.5% inflation. Crazy, crazy high numbers. And here is the Federal Reserve Bank of St. Louis President James Bullard's statement. He said that he supports raising interest rates by a full percentage point by the start of July, which is a lot, which is right now 0.25%, which means that increasing by 1%, it means that it is like four times increase. It's going to be increased all the way to 1.25. It's 5x increase in interest rates, which also means that 5x more payments for debt maintenance for companies to begin with. So, and this is the biggest increase since so he supports raising interest rates by a full percentage point by the start of July, including the first half-point hike since 2000, in response to the hottest inflation in 4 decades. And so 25 basis points at every meeting this year except for November, bringing the total. So this is also what they're planning to do. Most likely at every single meeting that the Federal Reserve will have, they're planning to increase the interest rates by additional 0.25%, which brings the total interest rates by the end of this year possibly up to 1.75%. Which is very much big, which is incredible increase in percentage points in X time folds, all the way from 0 to 25%. And this brings me to another thing, which I'm going to show you in a moment. So this one. At this very moment, you see, and this was the graph that I was showing in my previous presentation. So as you can see, the inflation and interest rates were always more or less going in the same direction. The responsibility of Federal Reserve is to balance the economy, let's say, so in very, very general understanding, which basically means one of the responsibilities of the Federal Reserve, whenever the inflation goes way too high, they increase interest rates, which basically means making money less affordable, so which basically means that inflation goes down as a result, at least in their best hopes. But as soon as the inflation goes down, as soon as the inflation is down, as soon as the borrowing money, okay, so let me just rephrase it. Okay, as soon as the economy, is struggling, this is when the Federal Reserve decreases the interest rates to stimulate the economy. And this is exactly what we saw in the beginning of this year, in the beginning of this pandemic in 2020, 2021, the entire 21, when the interest rates were as low, and they're still as low as 0.25%. Borrowing money is extremely easy. That's why all these technological companies that are capital intensive companies, that's why they borrow money so cheap, and they can do it like without paying too much. It's like 0.25%. It's nothing. And as you can see, right now the inflation is going significantly up, but interest rates are still basically the same. There is no response from the Federal Reserve, so which is unheard of. This is like literally the inflation is going up and the Federal Reserve is doing nothing. They're like, wow, it is so cool to print money. Look at this, we can make the stocks go up like it's too crazy. We can make the average annual return of the S&P 500 to be 30%. Let's just keep printing money because it's so fun, it's so cool. We're all getting rich. It's like literally they're doing nothing when they're supposed to do everything. And so the last time the inflation was this high, which is, like I said, approximately 7.5%, it was approximately in the 80s. So as you can see, here is the 80s, and approximately here is the inflation of approximately, they say, 7.5%. But at this very moment, our interest rates are 0.25%, and when the inflation was this high, 7.5% back in 1982, the interest rates were, as you can see, as high as 15%. Can you imagine what happens if the interest rates go from 0.25 all the way to 15%? Of course, it's not gonna happen at once. It's not gonna happen at the next Federal Reserve meeting, but still, can you imagine? Going from 0.25 all the way to 15%, this means increasing interest rate 60 times, 60x increase. And those companies which are completely unprofitable, zombie companies that are just barely making enough money to survive, whenever they need to pay 60 times more in interest payments, I don't think they're gonna even try to survive. They're just gonna close the doors, close the business, go out of business, go private, whatever, like go bankrupt. Because imagine, every single dollar counts at this very moment. And then eventually, like 5-10 years from now, whenever, you will be paying 60 times more in debt maintenance. Of course, companies like this will just be eliminated. They will be obliterated. They will be eviscerated. They'll just go into void, and like null and void. That's it. No one will ever remember about them. And this will be obviously, first of all, smaller companies, which not too many people are talking about. But then there will be chain reaction. More and more companies will start going bankrupt. More and more famous companies started experiencing financial difficulties. All those companies which are kind of starting to make net income, they'll once again they'll be pushed all the way to net losses. And then it's gonna be like Palantirs, like all this, like Affirm, all these companies that are hyped companies, cool kid stocks, all these companies, they might be good companies, but they're just cool kid stocks anyways for me. So, and then this is when these companies will once again start experiencing financial difficulties. So, but why stocks still continue going up? One of the biggest reasons for the stocks to go up in the past couple of years were the corporate buybacks. So first of all, there was so much money. People were just borrowing money, corporations were borrowing money, banks were not knowing what to do with the money, so they're engaged in this reverse repurchase agreement, in this reverse repo market, where they basically give back money to the government once again, because they literally don't know what to do with this. No one needs so much money, and yet still JP boy was still printing and printing money, like, we don't need more money. He was like printing and printing. He just got addicted with the stocks going up or whatever. And so because of so much money and so easily accessible money, some companies, corporations were even borrowing money, lending money, increasing their debt just to keep doing corporate buybacks. Because buybacks, once again, are one of the forces that brings the stock prices up. When you buy back your own shares from the market, you decrease the number of shares, which basically means that every share becomes more valuable. Buybacks do not add any value to the business. The only reason for a buyback is to increase the share price, to make the owners of the company, the major shareholders, richer. When you have $100 million worth of shares, just in increase in 5%. It can happen in one single day, 5% increase. Instantly you become $5 million more in terms of net worth. Just in one day you just made $5 million. And so once again, right now annual reports are done. So many companies are once again applying for share buybacks. They're again announcing share buybacks. These I just went through the news. These are just most recent news. Pyrogenesis, like all this Bricel, corporate stock buybacks hit a record. BAT launches 2022 stock repurchase program. PepsiCo, BP, British Petroleum. The Twitter authorizes $4 billion in share buybacks. ArcelorMittal, Equinor, Darren Caesar, like, so as you can see, so many companies. And these are just, obviously I was not cherry picking. I just went to the corporate buybacks 2022 and clicked on the news. But all you can see is that companies once again announcing more and more buybacks. So as a result, this is what we have. The stock market in general kinda resisted, kinda survived the first earnings season. It's not the first one, it was the last earnings season of 2021, to be honest, annual report season. So it kinda resisted this earnings season. So right now we're kinda stable all the way until the next earnings season. The interest rates are still not going up. Maybe that will be announced in the next Federal Reserve meeting. But once again, all these things are already more or less implied in the price of the stocks at this very moment. So if we see the increase in the 0.25%, this is exactly what every single one of us expects. So most likely this will not affect the share prices. What will affect the share prices if the increase will be drastic, if they decide to increase by 1% at once or some other black swan events, this is what impact the prices. But as for now, biggest companies, fun companies, Netflix, Nvidia, Teslas, Microsoft, all these companies, they kind of reported decent. Some of them reported good, some of them were failing, like Netflix and Facebook, but overall it was okay. The rest companies, which are like 0.01% of entire stock market capitalization, even if they go 50% up, it will not create even a smallest dent in the S&P 500 or entire stock market index. So this kind of we can ignore. This is if we are an individual investor, this is when it matters. But so far, we're gonna be more or less stable. I think we're not gonna go up or down in the next 3-4 months. I think it's my honest opinion. For the next 3 months, we're gonna be more or less at the same levels. Let's see if my prediction will come up correct. And basically I would say that's it, that's everything that I wanted to present today. Let me put myself full on the big screen, and now is the perfect time for every single one of you to ask any questions if you have. Thank you so much for joining. Thank you, Mr. Araya. Thank you, Macy's, I don't know. Sorry if I'm butchering your name. Thanks so much, Investor Nick. Thanks so much for joining. I hope this was understandable. Let me know in the comments if you have any other questions. This live stream will be uploaded on Sunday. If you have more questions by that time, feel free to write comment. And thanks so much for joining. Have a good weekend. Bye. I cannot end it.